Welcome to channel. Today we are going to talk about how to finish or end liabilities in finance, and this is a very important topic because liabilities are obligations that businesses and individuals carry, and knowing how to manage them properly can make a huge difference in financial health. Now when we say liabilities, we mean responsibilities that must be settled whether they are short-term or long-term, and the process of ending them requires disciplined planning and clear strategies. First, let us understand that liabilities can be categorized into different types, such as current liabilities, which are due within a year, and non-current liabilities, which extend beyond a year. Examples of current liabilities include accounts payable, wages payable, and taxes payable, while non-current liabilities include bonds payable, leases, and pension obligations. The journey of ending liabilities begins with identifying them clearly, because you cannot finish what you do not fully recognize. Once liabilities are identified, the next step is prioritization. Not all obligations carry the same urgency. Some require immediate attention because they are due soon, while others can be scheduled for later settlement. Prioritization helps in allocating resources effectively and ensures that critical obligations are not missed. When you prioritize, you create a roadmap that guides you step by step toward completion. Another important aspect of ending liabilities is creating a structured plan. This plan should outline timelines, methods of settlement, and resources required for each liability. For example, if a company has accounts payable to suppliers, it should schedule payments in alignment with cash inflows to avoid liquidity issues. Similarly, if there are long-term obligations like leases, the plan should include strategies for gradual settlement over time. Cash flow management plays a central role in finishing liabilities. Without healthy cash flow, it becomes difficult to meet obligations. Therefore, monitoring inflows and outflows is essential. Businesses often prepare cash budgets to forecast availability of funds and align them with liability payments. Individuals can do the same by tracking income and expenses to ensure that obligations are met without stress. Another strategy is consolidation. Sometimes multiple liabilities can be combined into one structured obligation. This makes management easier because instead of handling many small obligations, you deal with a single larger one. Consolidation reduces complexity and provides clarity in the path toward settlement. Discipline is also key when working to end liabilities. It requires consistent action and avoidance of unnecessary new obligations. If you keep adding new responsibilities without finishing old ones, the cycle never ends. Therefore, focus on completion before taking on new commitments. This mindset ensures progress and prevents accumulation. Discipline is also key when working to end liabilities. It requires consistent action and avoidance of unnecessary new obligations. If you keep adding new responsibilities without finishing old ones, the cycle never ends. Therefore, focus on completion before taking on new commitments. This mindset ensures progress and prevents accumulation. Communication is another factor when dealing with liabilities, especially in business contexts. Maintaining open communication with creditors, suppliers, and stakeholders helps in negotiating terms, extensions, or settlements. Transparency builds trust and can lead to favorable arrangements that make ending liabilities smoother. Documentation is equally important. Every liability should be properly recorded with details of amount due date, and terms of settlement. This record keeping ensures that nothing is overlooked and provides a clear picture of progress as liabilities are gradually finished. Monitoring progress is a continuous process. As you work through your plan, you should regularly review completed obligations and remaining ones. This review helps in adjusting strategies if needed and keeps motivation high because you can see tangible results of your efforts. Ending liabilities also requires foresight. Sometimes obligations can be anticipated before they arise. For example, taxes payable at the end of the year can be forecasted and planned for in advance. By setting aside resources early, you reduce the burden when the liability becomes due. Foresight prevents surprises and makes the process smoother. Risk management is another dimension. Liabilities often carry risks such as penalties for late settlement or damage to reputation. Therefore, managing risks by timely completion is crucial. Businesses often create contingency reserves to handle unexpected obligations. Individuals can do the same by maintaining emergency funds. Another way to finish liabilities is through asset management. Sometimes assets can be utilized to settle obligations. For example, selling used equipment or property can generate funds to pay off liabilities. This strategy converts idle resources into active solutions and accelerates completion. Efficiency in operations also contributes to ending liabilities. When businesses streamline processes, reduce waste, and improve productivity, they generate more resources which can be directed toward liability settlement. Individuals can apply the same principle by cutting unnecessary expenses and focusing on essentials. Mindset plays a big role in this journey. Ending liabilities requires commitment and determination. It is not just about numbers but also about attitude. When you approach obligations with seriousness and consistency, you create momentum that leads to completion. Education is another tool. Understanding financial principles helps in making better decisions about liabilities. When you know how obligations work and how they affect overall financial health, you are better equipped to manage and finish them. Therefore, continuous learning is part of the process. Technology can also assist in ending liabilities with modern tools. Businesses and individuals can track obligations, automate reminders, and analyze financial data. These tools reduce errors and provide clarity, making the process more efficient. Collaboration is useful in business contexts. Teams can work together to manage and finish liabilities by sharing responsibilities and coordinating actions. Collaboration ensures that no obligation is neglected and that resources are used effectively. Flexibility is also important. Sometimes circumstances change and plans need adjustment. Being flexible allows you to adapt without losing sight of the goal of finishing liabilities. Flexibility ensures resilience and continuity in the process. Finally, celebration of milestones is valuable as you finish liabilities. Acknowledge the achievement. This builds motivation and reinforces discipline. Whether it is a small obligation or a large one, completion deserves recognition because it represents progress toward financial freedom. In conclusion, ending liabilities in finance is a structured journey that involves identification, prioritization, planning, cash flow management, consolidation, discipline, communication, documentation, monitoring, foresight, risk management, asset utilization, efficiency, mindset, education, technology, collaboration, flexibility, and celebration. Each of these elements contributes to the overall process and ensures that obligations are settled effectively. By following these principles, individuals and businesses can achieve stability and growth while freeing themselves from the burden of unfinished responsibilities.